What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and yeah, hopefully you've watched yesterday's video, then you'll get an idea of what everything is. But quite an interesting start to the week. I am going to just explain all these PD arrays because there's a lot on my screen and I do want to clear it up a bit. So I'll start from the top and work my way down. This is a weekly consequent encroachment. This was the highest I wanted to see price trade this week, so I still have my eyes set on that. This is a weekly implied fair value gap between this low and this open. This should provide resistance for price, but can still be used as a target. This is a daily bullish order block. Now, in yesterday's video, I was saying I'm watching this closely, and if it gave way, then we'd likely run for these lows. And as you can see, that's precisely what happened today. But yeah, quite a cheeky move by dollar, and I will explain why as we get into things. So below these lows, sell side liquidity, why? There was consolidation there, and they're relative equal lows. I had my eyes on set on those for like the past 2 weeks, so it's nice to see we finally grabbed that. Again, another weekly consequent encroachment, and then sell side liquidity here and here, which we don't really need to worry about right now. So that's everything on there. Before I do get started, definitely join the mailing list, guys. My first email goes out in June. I'll have lots of juicy content there for you. So join the mailing list, link is in the description. And yeah, let's get into things. So we're going to start on the weekly, and I'm still going to keep our attention on this implied fair value gap, and the reason for that is because it looks like price is going to try and find some kind of premium. If you remember my Sunday video, which is getting a lot of views, by the way, so if you haven't watched it yet, definitely go check it out. If you've watched that, you'll know that I want to see a down close week, right? So because of that, I want to see the high get made on Monday, Tuesday, and Wednesday. And obviously we're now moving into Wednesday, so I'd like to think that the high could get made on Wednesday. It can still happen on the Thursday, but regardless, this is still relevant. So we'll get this implied fair value gap right here, and we'll put weekly. And then I'm also going to mark out the midpoint of this wick, because again, if we're to find resistance, as in if price is to trade on lower, we should find resistance at the 50% level. So this is still going to be the highest I expect price to trade. Don't get me wrong, if price trades above it, that will let us know that, okay, we're likely a little bit more bullish than we anticipated, and we can think about trading up into this rejection block up here. But right now, I'd like to think that this is going to be the highest. So let's definitely get this weekly consequent encroachment. Like so. And then now we can drop down to the lower time frames and see what's going on. So you'll see we've came down and taken out last week's low. So what's that? Sell stops have been accumulated. So we now need to look at some kind of premium PD array for price to trade into to then key off again. So let's go to the daily, and you can see here's that implied fair value gap. And what you'll find is that this implied fair value gap actually lines up nicely with this implied fair value gap. So I do believe that price is going to continue to draw up into here, moving into Wednesday and possibly Thursday. So yeah, that's pretty much my bias moving into Wednesday. You'll see that we had a very shallow high made on Monday. So I would like to think that Monday's high is going to be a nice draw on liquidity. So we can write buy side liquidity above there. And then we haven't actually closed just yet, but there is another implied fair value gap right here. And the fact that we've now traded through it on both the downside and we're just closing on the upside now says to me that this implied fair value gap should act as an inversion fair value gap. So I want to see this range right here. I'm going to make this a different color. Let's make it red. I want that to provide support for price. And when we drop down to the lower time frames, we can take a better look at that. What I'd also bring our attention to is 50% level of the wick. But because we still have 2 hours of trading time, I don't really want to use this wick just yet. So for now, I will just use this range right here. But like I said, it is nice to see that we finally grabbed those sell stops below there. Now we need to offset them somewhere, and our first target for that would be this buy side liquidity, where we also do have this imbalance. So let's now go to the 4 hour, and you'll see how we came down, swooped those stops. Again, we gave way to that bullish order block I was talking about yesterday. So what does that mean? That we're likely going to grab those sell stops. That's precisely what happened. Came down into this consolidation, and then you can see we've had a large expansion since, and we've taken out this swing high right here. So this, I see it as a change in the state of delivery on a 4 hour basis. Why? Because we've closed above this bearish order block. So there's a level of support that we're seeing get provided right here. So let's definitely get the midpoint of this range marked out. And I'm going to be paying close attention to this range as we drop down to the lower time frames. But overall, moving into the new day, we've got all these beautiful relative equal highs above here. Why they're relative equal highs? Where you can see this high, and this high, they're all relatively equal, right? So that's where buy stops are going to be residing. So I do expect price to want to draw up on into that. And here you can see a standard normal fair value gap, and it's on the 4 hours, so it is still very relevant for price. So let's get that drawn out as well. Let's just bring this to the front, and we're going to write 4 hour fair value gap. And then finally, let's now drop down to the 1 hour. So this is what I mean by you have to be careful at the beginning of the weeks, because you do have to try and get an idea, okay, where does price want to go first, type of thing. I still want to see a down close week, and like I said, we can still create the high on Wednesday, or we could create the high on Thursday and see like a midweek reversal, as in Thursday reversal. So that's why we do have to be cautious. But in terms of targeting and where we want to see price draw to, we now have that set out so that we can use that to our bias when trading, obviously, GBP USD and Euro USD. So let's now drop down to the 1 hour, and you'll see how we came down and made a breaker here, low, high, low, low. Ran these highs, changing the state of delivery, and you can see we're just finding support above this little consolidation. So one level to definitely keep an eye on is going to be this high right here. And the reason for that is because this is where the change in the state of delivery happens. So this is where we went from bearish to a bullish program to start looking for some kind of buy side. So we can draw this out. I usually like to make these orange, and I want us to pay very close attention to this level. Actually, the orange on the red doesn't work very well, does it? I want us to pay very close attention to this moving into Wednesday's price action, because this should provide support to then send price higher and run for the relative equal stops. So definitely keep an eye on this high. Price shouldn't need to come any lower than this. Ideally, in terms of trade setups, if price comes down into here, we also have a fair value gap coupled with a breaker, stop loss below the order block, and that should set us up nicely. But again, it all depends on the time that price trades into this, and again, whether we are getting the reaction we want. So yeah, that's how I'm watching price. But I do like the fact that we've grabbed these sell stops and we're finally moving higher towards this implied fair value gap and 4 hour fair value gap. Let's quickly take a look at the 15-minute just to get a better look. This looks actually absolutely gorgeous to me. Low, high, low, low again. This is the breaker, last up close candle. Keep an eye on that. And then where our target would be these relative equal highs. Now, once we fill this 4 hour fair value gap, that doesn't mean that price is just going to turn around and trade lower. It means that price can technically carry on trading higher, and we need to be wary of that. First, we have the consequent encroachment, which may be a target. If we get to this level and price is, rallying and really pushing hard, then we can start thinking about these highs to get taken out. So this is a possibility. Ideally, we don't see that happen, purely because I wanted to see a down close week. But if, like I said, we do get here and we do start running up to these highs, then we need to start thinking about higher prices. But we can speak about that tomorrow. Overall, right now, all we need to be focused on is where price is drawing. We have a target, we have a discount that we're willing for price to go to, and then we can use that to our advantage. Now, at what point would I not be happy with price? Well, let's say price trades right through this breaker, so we come down to it heavily bearish, and we lose this. Was this a daily? It's a daily implied inversion fair value gap, right? So if we lose this red range, basically, from this open to this open, if we lose this, so we trade back through it on the downside, I'd probably be bearish again pretty much and expect us to tread on deeper. But with this kind of expansion and displacement to the upside, plus we haven't made the high of the week yet, suggestively, I'm happy for us to be expecting a few more higher prices first. So that's how I'm looking at dollar. I hope that all makes sense. Let's now head over to GBP USD. So I've got lines all over the place. I'm going to clean it up a bit, and we are going to start on the weekly here as well. So what you'll find is that we just about missed this high. So what have we created now? Relative equal highs, which creates buy side liquidity. So we're going to write buy side liquidity here. We know that these are likely going to get grabbed, whether that's this week or next week. We don't need to worry about that right now. But what I'm saying is that is now relevant because we just about missed that high. So it's likely price is going to want to come and grab that later at a later point in the week. There is an inversion fair value gap. I do believe I brought our attention to this in what day? In Sunday's video. Why is this an inversion fair value gap? Delivered on the downside, closing basis on the upside. So I'm looking at the 50% level of this to provide support. So the same way that we're looking for some kind of premium for dollars trade to, such as these levels up here, is the same way I'm going to be looking for pound to trade down into some kind of discount. And our first stumbling block, or PD array, in the discount that price will have to trade to is going to be this implied fair value gap, as in this is what we should see provide support, and it's whether this provides support or simply gives way that's going to help us know whether we should be continuing to go long or short. So let's drop down to the lower time frames, but first let me just write weekly inversion fair value gap. We can put IFVG for that. So that's all cool. Let's now drop down to the daily, and you'll see how price wicks right up there. This is a rejection block level. Now rejection blocks are very confusing. Even to this day, I don't really like them that much because I'm not always sure about them. But what they are is basically, you see how this wick and this wick both rejected price. We should have had this as a PD array marked out to show that when price goes up there, price can turn away, and that's what we saw happen. Definitely going to do some more studying on that, so do join the Discord. Do join the mailing list, because I will have content studying things like that, very advanced. But overall, we're looking at discount PD arrays. So we have this weekly inversion fair value gap, and what can we see inside of that? Well, we have a bullish order block right here. I'd like to think that can provide support, and then we have a potential reclaimed bullish order block right here. I'm not going to talk too much on this because I did speak about it at the beginning of the week. Right now, just going to keep it simple. We'll look at this bullish order block as the next PD array. Yes, there's a fair value gap down here, but when we look at the range between this low and this high, we should be looking at discount PD arrays. So what discount PD arrays, which means anything below the 50% level, is there? Implied fair value gap. I'm not going to mark this out because it'll get too messy, but mainly this bullish order block. So let's just write daily bullish order block out. You think I can't type? We'll move this to the right, center, or middle. And now this is the discount PD array. I'd like to think that pound will start to trade lower towards. In terms of the highest I want to see price trade, again, this is going to be a rejection block level now. And then we have obviously this long wick. So what's convenient is that rejection block level lines up with the 50% level of the wick. Perfect, because now I know the highest I want to see price trade. I don't expect price to trade back above that 50% level until we've traded down into that discount. Even better, it'll be nice if we respected the 25% level, which you'll see that this wick respected already. So we might find that price doesn't even get to the 25% level because it's already been traded to here. And you'll see what I mean by that tomorrow, I believe. But let's get this marked out anyway. And then we'll drop down to the 4 hour and take a look at price. So in fact, let me mark out a couple of things on this daily. So there's a 25% level, which has already been traded to. But what about half of that, which would be a 12.5% level, guys? This is really advanced. I've only seen it happen like once or twice, but I do know that price can key off this level just as much as it can key off this level. Now, the reason I'm not saying this level is because we've already keyed off it here, like it's already been traded to, right? So I'm just looking at this level, but let's go to the 4 hour and see what we can find. So you'll see we have a clear change in state of delivery. We have a high made into a rejection block, and then we have two down close candles. So now we have this, which is a bearish order block. So as price trades back into that, we should be expecting resistance. And we also have a gorgeous breaker, high, low, higher high, and then obviously we've broken lower. So this down close candle should be providing resistance. Here's that 12.5% level. So any kind of rallying tomorrow, basically, I'm looking for shorting opportunities to send price lower and start running for this low towards our daily bullish order block. So let's get this low marked out as sell side liquidity. You'll see it's also coupled with this low. How convenient. So it's like sell side liquidity. We'll double that up. And then on the 1 hour, we should be able to get a better look at price. So here's that breaker again. We're kind of wicked into it, but like I said, moving into tomorrow, London session, Asian session, we may find we rally up back into this range, hopefully see an optimal entry, and then we should see some nice expansion to the downside to take out these relative equal lows below here. And then again, this is our bullish order block on the daily. So once price gets down here, I simply get out the charts, we wait. If we get a reaction, we know we can probably be long, and this was the high of the week created. Low of the week created. That would be ideal to me. It doesn't have to happen. We can still be profitable without. But my point is, we have directional bias. We know where we want to see price go. We've rallied first to start the week. Haven't yet created a low. We're expecting an up close week. So when's this low going to get created? Ideally Wednesday or Thursday now. But yeah, definitely keep an eye on this breaker level, and definitely keep an eye on this 25% level. We will go to the 15 minute. you'll see how we came up into that rejection block level. You see, rejection block levels are interesting because it uses it like a swing high, right? Like if this was a swing high, this kind of price action would have been easier to predict almost, because it's a swing high, it's sweeping liquidity, but it's treating it like one, even though we didn't actually take out the high, which is, we know is up here, but it still treats it like one, which is why they're relevant, and which is why I'm going to be doing more studying of this in my via the mailing list and such. But what I'm saying is that we've broken lower, we've keyed off it, and you can see how price is now clearly wanting to go on lower. So yeah, breaker 12.5% level, and then again we got our relative equal lows all below here, looking like they're about to get gobbled up. So that's going to be everything on pound. Hope that all makes sense. Let's now finish up with Euro USD. This is a much longer video than I anticipated, guys, but hopefully you find it useful. Now let's go to the daily. I have lines all over the place. I do apologize. Let's just clear all this up. See, when you see lines like that, that means when I'm trading, usually I do just like, I'll start using the horizontal raise and you'll see lines everywhere, because on the lower time frames they help me. But yeah, anyway, here's the weekly. So we came up, took out Monday's high. So now we need to look out for some kind of discount PDRA to trade to. So I see two PDRAs here. We have this fair value gap all the way down here. Now I do know that Euro's moving a little bit weaker than pound right now, so it could very well reach down into this. But our first level would be the midpoint of this wick. So let's get this marked out first. Well, let's get this marked out. We'll make it red, dashed, and we can write weekly consequent encroachment. And then here we have a weekly fair value gap as well. And again, now look at this. This is a rejection block level the same way, because this price traded up into this range. What happens? We got rejected. So that's something to take into consideration. But again, we're going to study that more in the future. Let's drop down to the daily. Came up, wicked up, grabbed all these buy stops. So now we're looking for some kind of discount PDRA to trade into. Now there is an implied fair value gap right here, coupled with an inversion fair value gap. I did bring our attention to this either yesterday or Sunday, probably both days. But what I'm saying is that this range right here is an imbalance. So we want to see price, see if it can draw down into that. And how convenient is it that this consequent encroachment lines up with the bullish order block open? So I am going to be watching this very closely. I am going to put daily implied inversion fair value gap. If you don't know what that means, join the mailing list. But I'm plugging this mailing list so hard, guys. Apologies. So if we look at this long wick that we have from Tuesday, again 25% level pretty much lines up with that rejection block level, but we'll get the 25% level marked out nonetheless, like so. And then we have this low, which should be easy to attack. Fair value gap here, but remember, we're looking for a discount. So we need to look at the current trading range we're in, this low to this high. What's in the discount? Well, we have this fair value gap, don't we? Because I don't want to involve this in the inversion too much, let's just use this range for now. And that should be enough. And we know that that's in the discount. So let's now go to the 4 hour. And you'll see how we had a beautiful displacement to the downside on Euro. Classic breaker, high, low, higher, higher, broke lower. So if price wants to come back up to that 25% level, which just happens to line up with the breaker, we know that we can look for shorting opportunities there to then trade on lower. Beautiful low right here, sell side liquidity. So let's double that up as well. And again, you can see a fair value gap. So when I say implied fair value gap, what am I implying? The fair value gap isn't clear here. I'm implying that there's one there. Okay, well, show me it. Well, if we drop to the 4 hour, it's here, isn't it? Clear as day. That's why we call it an implied fair value gap, because you can't see it on the daily, but it's code for that it's there, it exists, and it clearly exists on the 4 hour. So that's what an implied fair value gap basically is. But yeah, definitely watching this range, 25%, 50% level of this also lines up with 25% level of that longer wick. What a coincidence. Sell side liquidity target, 1 hour, clear displacement, bearish order blocks as well. Definitely need to keep an eye on these. So price should be quite sensitive to these if we're bearish. Like, no, we shouldn't see bearish order blocks, being disregarded. So for example, this bearish order block right here, this should be respected as such. So we'll keep that marked out like so. And then on the lower time frames, we know that if we do rally back into this range, we should be suspect and then expecting short an opportunity to run for the sell side liquidity. Now, like I said, once we reach here, so let's say we dig deep into this range, once we reach here, we wait. If price trades through it and dollar wants to continue rallying through its target, so let's say dollar gets right to the top of here and starts hitting this weekly consequent encroachment, if we start trading on lower, where's our next target? It'll be down here, and we have this fair value gap, and that's fine. It will change the course of my ideas for the week, but right now everything's still pretty much going to plan. I'm expecting the low to be made on the pairs and the high to be made on dollar, hopefully today and moving into Thursday. So that's going to be everything, guys. Hope you found this insightful, and I'll catch you in the don't forget to join the mailing list, smash subscribe, drop a like, drop a comment, blah blah blah, and I'll catch you in the next one. Peace.